Welcome to Hub Dialogues. I'm your host, Sean Speer, editor-at-large at the Hub. I'm honored to be joined by David Frum for another installment of our bi-weekly video and podcast series, Frum Dialogues. David, as listeners and viewers will know, is a staff writer at The Atlantic, the author of several books, and a highly coveted guest and commentator on various cable television programs. We're honored to provide him with a platform to share his insights and analysis on key issues concerning Canadian policy and politics. In today's episode, we're discussing the latest economic developments, including the Federal Reserve's largest interest rate hike in nearly 30 years, Canadian Finance Minister Chrystia Freeland's warnings about a soft landing, the political economy consequences of stagflation, and the ongoing collapse of cryptocurrencies. David, thank you for joining me as always.
Well, I would say it's a pleasure to be here, but after a week of havoc, like the week we've just undergone, let's just say I'm glad to be anywhere.
Well, let's start with Federal Reserve Chair Jay Powell's speech from last week. He began his opening statement by recognizing the hardship that high inflation is causing and committed to bringing inflation down as expeditiously as possible. He then announced the largest interest rate hike since the mid-1990s and signaled more are coming. If the Federal Reserve could be criticized for taking too long to recognize the inflation problem, it now seems seized by it. What do you think has contributed to the urgency? And more generally, David, what are your thoughts on how the Federal Reserve has handled these issues over the past couple of years?
Well, let's begin by taking a more global focus, because the Federal Reserve action was immediately followed by action from many other central banks, the Bank of Japan, the Swiss Central Bank. It was clearly done in coordination with the European Central Bank, the Bank of England. I'm sure the Bank of Canada was part of all of this. So we had coordinated action by a number of the world's leading central banks against what is a global problem. We are not in the world of the 1970s, where there's a lot of individual monetary autonomy country by country. That we have a global problem. The governments of the world together created massive fiscal stimulus and massive liquidity to mitigate the shock of the pandemic. Governments underestimated how much inflation there would be, because the last time this happened, back in 2009, governments put in what they thought was massive liquidity, massive support, and we got a sluggish response just about everywhere, not in Canada, but just about everywhere else, especially in the United States, and very little inflation. So effectively what they did in the United States, the amount of stimulus between 2020 and 2022 was more than triple. The fiscal stimulus was more than triple the stimulus in 2009. The monetary stimulus was enormous as well, maybe not as big as in 2009. And there was a gamble that this time it would not deliver inflation, but this time was different, and it did. And so governments all over the world, central banks all over the world, are going to have to squeeze the inflation out. And my guess is it is going to hurt, and it's not going to be a soft landing.
Well, let me take you up on that specific point, David. Powell's remarks emphasize that the U.S. economy is strong and able to withstand tighter monetary policy. Yet Canadian Finance Minister Chrystia Freeland also gave a major speech last week in which she took a bit of a less definitive tact. She warned that a soft landing is not guaranteed. What do you think is behind these slightly different messages? Why do you think the Canadian government may be hedging on a possible recession?
Well, Jay Powell is not up for re-election, and Chrystia Freeland is. He doesn't have to worry about the voters. She does. And of course, her rendezvous with destiny is probably pretty close. They want to prepare people for what may be coming. I think one of the things you always have to worry about in these situations is, I forget now who was the stock market wisecracker who said, when the tide goes out, you discover who's been swimming naked. That whenever things begin to go sour, you discover points of vulnerability that were concealed during boom times, concealed during easy money. So back in 2008-9, for example, remember the slowdown in the U.S. housing market starts in March of 2007. That's the peak month. And prices and sales begin to decline in March of 2007. And the first bankruptcy on Wall Street doesn't occur until almost a year later, more than a year later, spring of 2008, when Bear Stearns goes under. And the attitude from early 2007 until the summer of 2008 was, okay, this subprime market, it looks like it's going to be a shambles, but the subprime market is not that big. And my institution had nothing to do with the subprime market, so we'll be fine. And no one understood until it was too late. The subprime market had been wired into everything else through these debt obligations, through these AAA bonds that contained little pieces. Remember the Monty Python joke about we have what do you have for dinner? We have rat pie, rat pudding, rat sorbet, and strawberry tart. Well, is there any rat in the strawberry tart? A little. How much? 3. And what you discover, so all kinds of people discovered that what they thought was their strawberry tart was in fact rat tart, full of subprime mortgages. So one of the questions we have to grapple with now is where are the hidden hand grenades through the economy that accumulated during the times of cheap money? And I'm very worried about crypto because I think crypto is like subprime in that it was a relatively small, relatively specialized market. You could go into it if you wanted to, and you thought you could avoid it if you didn't want to go into it. But I worry that there has been debt accumulated against crypto assets. And the thing I would direct people's attention to is the fate of a financial institution called Celsius. Celsius offered itself as an alternative to banking. It offered very high interest rates on deposits of cryptocurrency, and it paid those high returns by engaging in a lot of leverage transactions with other forms of cryptocurrency. So it's closed its doors. It will not be paying its depositors. And the question is, how hermetically sealed is an institution like that and others from the rest of the financial system? And if there's connections, if we discover that other people who didn't think they were doing currency have exposure to cryptocurrency, that could be the hidden hand grenade, or it could be something else.
We'll come back to cryptocurrency because I want to ask you about some of your comments over the past week or so along the lines that you just outlined. But before we get there, David, one of the great benefits of being able to draw on your commentary is you bring together so many different points of analysis: economic, social, political, and historical. You mentioned earlier that one of the challenges in the fiscal and monetary response in the past couple of years has been misreading the history from the global financial crisis. We now have commentators drawing historical connections to our current moment and the 1970s. The World Bank, for instance, has cut its global growth projections and now warns of stagflation. One gets a sense, David, that we're already living in a politically fraught moment. Tensions are high in Washington. We're only months removed from the trucker protests in Ottawa. What do you think about the political fallout from a sustained bout of stagflation? I mean, I don't want to sound hyperbolic, but are we at risk of entering a period of heightened political instability and social tension?
Well, we've had a lot of instability and social tension. I don't think whatever we're facing is going to look very much like the 1970s for a number of reasons. In the 1970s, we've had very resource-intensive and especially energy-intensive economies, much more so than now. It took a lot more energy to produce $1,000 worth of GDP in 1970 than it does today, and we are much more reliant on one particular forms of energy. Crude oil was by far, especially in North America, the most important fuel, with coal second, and everything else a distant third. And natural gas was not as important then as now, and certainly we didn't have the renewables, and hydro was a bigger factor, and nuclear was a bigger factor then than now. But still, these were very vulnerable economies to energy shocks. And then we had a whole series and sequence of energy shocks because the energy market was a lot less diversified in those days. I mean, it's really important to remember now that the largest producer of both oil and gas on the planet is the United States. That had been true in the 1950s and 60s. Then American production declined sharply, and the world became ever more reliant on the Persian Gulf and one of the most unstable parts of the world. But we've got many more sources of supply. We also, in the 1970s, we had a social model that emerged from the Depression and the war of very powerful labor unions that worked in tandem with businesses and governments. And that social model had achieved many good things for many people, but it had outlived its usefulness. And so one of the things that happened in the 1970s was we pivoted to a different kind of social model. And it was painful, and it resisted, contested, and the new model also has pluses and minuses. But working all of that out was I think, a major trauma. I think we're going to discover that it's just going to be very different, and so much of it is very related to the specific problems of what was done to combat the COVID shock, and then the difficulty of undoing what was done to combat the COVID shock. But the undoing will eventually be undone, and I think we'll find a new kind of economic stability. I hope so. So maybe that's misleading my analysis, but I also think
that's a great segue to my next question, David. If there is a silver lining here, is it possible that this experience is interpreted as something of a rejection of a more activist economic policy approach, including low interest rates and high fiscal deficits, and it leads to renewed support for a more sensible and clear-eyed economic policy agenda?
Yeah, I think you're right about that. I think there's both a narrow political economy benefit that we could have, and then a larger social economic benefit. So the political economic benefit is we needed to learn a lesson that inflation is always a potential threat. You have to be pretty old to remember that money costs money. That we have had, a series of economic waves, all based on the idea of, in the 1990s, very cheap money, in the 2000s, nearly free money, and in the 2010s, free money. And so and a lot of business ideas look good if the capital is free, that maybe don't look so good if the capital is not free. And that's one of the things that Wall Street has been telling us, is that maybe it's not going to be quite so cheap to have a gourmet meal delivered to your house. Maybe it actually does make more sense for you to go to the restaurant than for the restaurant to come to you. So those kinds of things are going to happen. I think that, but there's a big social economic possibility that I see ahead. And it's going to be bumpy, and it's going to be especially bumpy for the commercial real estate sector, a part of the economy very dear to my heart. A lot of friends and family involved with it. But we have had a model of people leaving their homes and going to work. And we invented that model in the days of the factory of the 19th century, and we continue that model in the days of the office of the 20th century, and we continue that model even further, even as the internet came about. And one of the questions that the pandemic raised is, do people need to travel so regularly to the office? And obviously, and I think many businesses believe it is more efficient for people to go to the office, and so you have to respect that. But it's also true that there are efficiencies when people go to the office somewhat less. Many of them are captured by women who can have more flexible working arrangements with their families. But there also are some interesting possibilities here for the way we use energy. I have long argued that a big part of the solution to the greenhouse gas and climate change problem comes not from changing the engines that take people from place to place, but rethinking how often people need to go from place to place, rethinking how cities use their space, and encouraging the development of communities which are lived, work, play, where you live in a townhouse on one end of a development. There is some kind of workplace on the other end of the development, and then in between are restaurants and places of amusement and entertainment, and that encourage you to use the car on weekends, but when you go back and forth about your day, it's possible to go on foot more. And if you can rearrange space like that, you can still use gasoline-powered motors and capture many more efficiencies than if people were making this exact same trip, but with an electric rather than a gasoline motor. And I think we had a big forced experiment with that during COVID, but as we emerge from COVID, I think we're having some new voluntary experiments, and it's going to take us a while to get the right answer. And again, I don't want to dismiss the concerns of employers that think we get more work out of people when they come to the office. And it's also that, look, we're paying you, you should work on our timetable, not on your timetable. But if it's possible to do a little bit less of that, there are some benefits there too, especially for women.
Yeah, I'm glad you raised that, David. Just as an aside, this is an issue that we intend to tackle in the coming weeks and months at the Hub. you hear arguments about the benefits of network effects. What Matt Ridley describes as ideas having sex that comes from people being together in an office or some other setting, with some of the downsides of that model, including the costs and consequences of long commutes for families and health and so on. So I'm viewers and listeners interested in those issues, stay tuned. Let me ask a follow-up question, David, about the Republicans and economic and fiscal policy. Yeah. The Republican playbook prior to 2016 was pretty conventional on taxes, spending, and deficits. At least in theory, Paul Ryan's thinking prevailed as party orthodoxy. But Donald Trump basically dismissed all of that. His administration cut taxes, raised spending, and ran massive deficits. As we start to see some pre-positioning in advance of the 2024 presidential primary, do you think we'll see candidates establish their pre-Trump credentials? Or is the party never going back to Ryan-era economic and fiscal orthodoxy, in your view?
Well, here's something I think Donald Trump has permanently changed for Republicans and maybe for everybody, which is he has made the Republicans a protectionist party. And that is the one place where the Biden people have been most continuous with Trump, unfortunately. There's a lot of protectionism in the Biden era too. It's just a couple of things about things that haven't happened under Biden. No attempt. The USMCA, the USMACA agreement that was supposed to be the NAFTA 2.0, solved none of the important problems that existed in NAFTA 1.0. You would think that a responsible government would come in and say, okay, there were real issues here. Like NAFTA dates back to before the era of online shopping, dates back before the era of streaming services. We should have some kind of continental charter so that Netflix can do business more efficiently. So it's possible to deliver packages back and forth from the United States, Canada, and Mexico. Those are real gaps that were just not imagined in the 80s. So let's do them now. That should happen. Trump repeatedly promised some kind of US-UK free trade agreement to mitigate some of the harm the British did to themselves by leaving the European Union. He made no effort, and Biden has made no effort. So our British friends are kind of stranded. One of the world's most trade-dependent economies is outside most trade arrangements that it so desperately needs. And that was their mistake, but we're their friends and we want to help them. No action. So that, I think, the legacy of protectionism looks to be an enduring one, very unfortunately. And that's something that I don't know who's going to take up again the cause of global commerce, whether it will be the right or will be the left. But that's one of the has always been the single most important thing it's necessary to get right. If you get that right, you can get a lot of other things wrong. If you get that wrong, it really almost doesn't matter what else you get right. I think we're going to have to see in the 2020s moves back to fiscal orthodoxy from governments of left and right. You cannot continue to run trillion-dollar deficits or trillion plus. Herb Stein, the very witty American economist, used to say, if something cannot continue forever, it will stop. And I think we're going to see that with the massive kind of deficit incursions. It felt easy because interest rates were low. What the world is about to discover is what Canada discovered under Prime Minister Mulroney. Mulroney balanced, Canada inherited huge deficits from Pierre Trudeau. Mulroney balanced the operating budget. The government taxed more than it spent on its operations. The problem was that the debt left behind by Trudeau was so enormous and the interest rates were so high that even as you ran a surplus on actually delivering goods and services and benefits to people, you're still running a deficit on the total cost of government. And it took even more draconian cuts in the 1990s and then an era of very low interest rates to bring Canada's fiscal affairs into order. I think the whole world is going to face that problem, that debts and deficits, everything you say about them in a world of 1% interest looks very different in a world of 5% interest, or God forbid, a world of 7 or 8% interest. So that's going to change. But I think it's very up for grabs where the parties are going to land. I think one of the things that really is true in the Trump years is we're going to see the traditional pattern of who was on which side of questions that lasted basically from the New Deal to the 1990s. That's not how it was before the New Deal between the parties, and maybe it's not going to be how it is afterwards. I mean, Clinton and the Democrats made a real bid to make the Democrats the party of fiscal orthodoxy. That changed, but that could happen. And I think what a lot of us are going to need to ask ourselves about our politics is, are we Republicans and Democrats first, or are we believers in free trade and fiscal orthodoxy first? And for me, whoever is for free trade and fiscal orthodoxy, I'm for them. And I don't care what the label is. I'm for the guys who are for free trade and fiscal orthodoxy, the guys and women who are for free trade and fiscal orthodoxy.
Well, we'll no doubt see that debate start to take shape as we move closer to the primaries. I want to come back, David, to something you raised earlier in the conversation about cryptocurrencies. This is a development, of course, that broadly coincides with the Trump era. And until recently, Bitcoin was considered a store of value, somewhat immune to the fluctuations in the value of risk assets. It's now subject to the sort of factors that move the value of risk assets, like inflation, stock markets, and Fed monetary policy. Why were the assumptions that crypto and Bitcoin would decouple from the rest of the financial markets wrong?
Well, there were obviously many of the people promoting were either fantasists or liars. Look, if you invent a product whose authentic, actual functional business case is that it's a really good product for criminals, that you shouldn't be surprised if it turns out that a lot of the people promoting the product are not completely honest in what they say about it. Bitcoin. I don't want to be completely flip because I am told there are important uses of Bitcoin for political dissidents and authoritarian regimes, and if it helps them, God bless Bitcoin. That's a good thing. But the core business use for Bitcoin was always it was a way to make criminal transactions more invisible to the state. Now that's a real business, unfortunately, and it creates real value. And I can understand why Bitcoin got to be to the $5,000 and $8,000 level before the pandemic. But what happened in the pandemic was clearly a speculative bubble. And look, God sends you warnings. If a product goes up and up and up in value during an era of super cheap money, and someone is saying it will go up even more if money becomes expensive, that's facially implausible, right? That if Bitcoin is a hedge against inflation, then it should have gone down when inflation was low. It should have become worth less during the pandemic. The very fact that it turned out that during a deflationary shock, during massive monetary ease, it went up from 8 to 50. That's a warning that when the old conditions return, it's going back from 50 to 8. And the inability of people to figure out something so obvious as that tells you, how much of this was, it was driven by charlatans, but it was taken advantage of. But the victims, of course, are non-charlatans. The victims are the gullible, and what we all have to earnestly hope is that the gullible were not able to borrow too much money against their Bitcoin holdings, and have not exposed the rest of the system to risk. What is happening is very painful for them and for their loved ones. But from a system point of view, we have to worry, did they spread their mistake to others? And I don't think we know the answer to that, and I fear we're going to find out over the next few months.
What do you think the political or policy fallout will be, David, from some of these develops in the cryptocurrency markets in the past week or 10 days?
Well, I think an important policy fallout is we have to decide whether cryptocurrency is a security or not. It's illegal in the United States, and I assume in Canada, I don't know this part of Canadian law, to sell a security without certain kinds of registration and disclosures. If these things are securities, then there will be a regulatory regime. If they're not securities, if they're currency, then we need to come up with some kind of deposit insurance system for them. And by the way, deposit insurance is insurance. You pay for deposit insurance. It's not free. It's not a gift from the government to you. You have to pay for it. So we have to find some way that the holders of Bitcoin will pay a premium to get insurance to protect their deposits. Or if it's a security, we need to regulate the transaction securities. What it is right now, which is a product invented to meet the needs of the criminal community that is then speculated upon by people who are in every normal community, that's just dangerous to them and possibly dangerous to the system.
Let me wrap up, David. I've taken up a lot of your time this week, but as you said at the outset, there's so much news and economic developments to dig into. I asked about the potential policy and political fallout of crypto in particular. Let me just ask about the policy and political fallout of some of these broader trends in the economy. We have midterm elections coming up in the United States. We ostensibly won't have a federal election in Canada until 2025, but we may have a leadership race within the Liberal Party. We currently have one occurring within the Conservative Party of Canada. Maybe just wrap up with some final comments or observations about what a possible recession and some of the economic costs that households will face as a result of the steps being taken by central banks may mean for our politics.
It's actually pretty simple, and this is the message of the Australian election, which is incumbents everywhere are in a lot of trouble. This is going to be a bad few years to be an incumbent. There will always be exceptions. If you're an incumbent who can make a special case that you've done an unusually good job, you may survive. But I think your default assumption is that if you're in power in 2021 and 2022, you will not be in power the next time the voters get a chance to comment on your performance. And that will be true whether the so I think, I just assume that obviously the Democrats are in a lot of trouble for 22. I think they're in a lot of trouble for 24. The Liberals in Canada are in a lot of trouble because I'm not the first to point this out. In a recession, most people keep their jobs. And however nervous and fearful they are, the fact is the harms of a recession are concentrated on a finite range of the population. Maybe 8%, maybe more lose their jobs, other people lose investments, but the majority come out of it, read about it, don't feel it. Inflation hits everybody. And so inflation is much more politically hazardous to governments than recessions are. Governments can survive recessions, they can't survive inflation. And the 1-2 punch of first you have an inflation that spreads harms generally, then you have a recession that concentrates harms, intense harms specifically. That's really dangerous for incumbents everywhere. And so we saw that in Australia. I think we're going to see that now throughout the world, with a few exceptions where incumbents can make special cases that they somehow beat the odds.
Thank you, David. Just a ton of insight today, as usual. I want to thank you for joining me for another episode of From Dialogues, and look forward and catching up in a couple of weeks, hopefully with some more positive news than today.
Let's hope for better news ahead. Agreed. Bye-bye.